Hey.
How's it going?
Good. Are you ready to do this?
Yeah.
Yeah? It's gonna be good. It's gonna be awesome. You're like, take it off, take it off.
Let's get ready.
Okay, let's get ready.
Let's see how.
Okay. Hi, it's Michelle Patterson Nipp here, keeping it real. Today I am in the Collingwood office at Maxwell Challenge Realty, talking with the lovely Danielle Franke, who is from Mortgage Sisters West, and they're a group of mortgage brokers, mortgage specialists, who work for River City Financial, right?
That's correct, yeah.
So, how long have you been doing this for?
So I've been in the industry for 9 years.
Mm-hmm.
In this office, I've actually been working here for 8 years, so it's been great working here.
Well, Danielle and I have done a ton of deals together. She's one of my go-to favorites for mortgages, and I wanted to talk to her about the new changes that took place last week as far as mortgages go, and specifically how it's going to affect buyers in the upcoming years. So can you just tell us a little bit about what happened last week with the changes?
For sure. So there was speculation prior to this, but last week they officially confirmed that as of January 1st, on the conventional side, so conventional mortgage is people that are putting 20% or more down on their homes, they will also be affected by this stress test. Now note, prior to this, if you had a 1 to 4 year term, you were using the benchmark rate, which is what the stress test is at currently at 4.89%. And for 1 to 4 year terms, they're variable. But on a 5 year fix, you could qualify it using whatever that current rate that we had on the 5 year fix. So if you want to look at kind of what that's going to influence next year, come January 1st, they'll have to qualify, they'll no longer be able to qualify using that 5 year term. They'll have to qualify using the benchmark rate or the greater of the current rate you're receiving on your 5 year fix plus 2%. Now that is the big change compared to the change that we had last November. Is the big changes that 2%. That's going to be what affects people the most.
So this is now affecting people who are doing conventional mortgages. So anybody who is putting down 20% or more on their mortgage, this is going to have some effects for them.
That's correct.
What about people who are putting down less than 20%?
So less than 20%, the stress test got introduced last year. So last year, November, they introduced the stress test for those. So everybody who's putting less than 20% currently has to qualify at 4.89 no matter what term you use. So, but at this time, if you were putting 20% down, you had a benefit where you could actually qualify at the 5 year fixed.
At whatever that 5 year fixed rate was.
That's right.
So now they're just adding 2% onto that 5 year fix.
To qualify.
And you have to qualify for that rate.
Yeah, so it's the greater of whatever the rate is plus 2% or benchmark. Right now, it would be definitely the 2%.
Right.
So let's look at an example. If you made $70,000 in income,
Okay.
if you were qualifying at the current 5 year fix, which is around 3.39%, you would qualify for a purchase price of about $400,000.
Okay.
Using the same income, when you introduce the benchmark rate, which currently is 4.89%, that drops your purchase price from $400,000 to about $350,000.
So, and now this is just the mortgage amount, right?
That's your purchase price.
Your total purchase price.
Yes.
Okay.
So your total purchase price. So originally you're looking at a $400,000 home, and now you can only look at $350,000. So come January 1st, your purchase price is going to drop by minimum $50,000. Now when we add that 0.2%, or sorry, not 0.2, that 2%, you'd be now qualifying, instead of 4.89, you'd be qualifying at 5.39, which actually drops your purchase price by another $20,000. So you'll go from originally being able to qualify for $400,000, and now you're qualifying for $320,000.
So I guess that could be pretty significant.
It's huge, yeah.
It doesn't take you out of the buying market completely, but it'll certainly affect the types of homes that you'll be seeing. So sometimes maybe your criteria might have to change. You might have to get a smaller home or in a different location that you weren't necessarily considering. But it's not going to take you out of the market completely.
No, definitely not. And a lot of times right now, conventional buyers, what I've noticed, they're not looking at their max anyways.
Right.
Very few are actually requiring that 5-year term, and it's maybe just because we can't use some income. Maybe the spouse works part-time, so we're not able to use that income, even though that income's coming in. So that's kind of usually where we'd be requiring that income.
And I know whenever I'm working with buyers, I always suggest to them, don't buy at your maximum.
No.
The bank's going to tell you, or your lender's going to tell you what your maximum mortgage allowance is, but it's definitely a good idea to shop for something less so that you're not going to stress yourself out if in 5 years from now the rates increase.
Right. So, and that's obviously the reason why the Bank of Canada is so worried in regards to what's going to happen, because we do have quite a bit of debts right now, and so they're worried that as interest rates go up, we will no longer be able to qualify for those homes, hence why they're introducing that benchmark or stress test.
Okay, so that's fantastic. Can we just do a quick little review? The mortgage rates for the stress test is going to now apply to conventional mortgages. So the people who are qualifying for the high ratio mortgage, or they're putting down less than 20%, there's no change.
No, because they've already been affected last year.
Right. Okay. And certainly, if you have any questions, please feel free to either call myself, Michelle, and I'll give you my information below, and I'll definitely hook you up to Danielle Franke, who can also answer any of your questions, and I'll also include her information below.
Thank you.
If you have any comments, or if you give this a likes and a thumbs up, if you like what you're seeing so far, give it a thumbs up, and don't forget to subscribe. Thanks for watching.